There are so many option strategies out there available to you. There's literally thousands of option strategies that you could choose to use. And for me, I've probably used hundreds of different option strategies at one time or another, experimenting with different things. And one of the things I've done over the years is I've kind of gradually whittled it down to where I have a handful of things that I'm always putting on. And today I wanted to discuss what are my core trading strategies as far as the things that I'm constantly in. So my core trading strategies, the trades that I'm always in. What are core trading strategies? Well, when I talk about core trading strategies, I'm talking about the strategies that you employ regularly. These are your primary go-to strategies. These are the things that you're doing over and over and over again. As you gain experience as an options trader, you will naturally gravitate to a few underlyings that you really like. You'll gravitate to a few strategies that you really like. And this typically starts to form what becomes your core strategies. For those of you that follow me over on the DT Options Discord, you guys get to see me trade each and every trading day. I hold a live voice chat there each and every trading day. I share my trading platform. Of course, I use TASTYTRADE as my trading platform. You guys get to see me trade as far as opening trades, closing trades, rolls. You guys get to see all the underlines, the various trades. I got a million different things on. And naturally, because I do so much different stuff as far as options trading, naturally the question arises, okay, you're doing a whole lot of different things, DT. What are your core strategies? What are the things that you actually like to do? Because I'm doing a lot of different things really as just educational material. Like I show you guys a whole bunch of different options trading strategies because I think it's important as an educator. But if I didn't do, for example, the YouTube channel or the Discord server, what would be my core strategies that I focus on? Well, because like most traders, I do have core strategies, things that I do over and over and over again. So I'm going to share that with you today. Now know this, just because I like these strategies doesn't mean that you will necessarily like them. Find what works for you. So number one among my core trading strategies has to be short puts in the ES and the MES. So we know that selling puts in the S&P 500 products, it just works. The S&P 500 tends to go up over time, and short puts are a fantastic way to profit, right? It's a trade that definitely has positive expectancy. If you do it over and over again, you're practically guaranteed to make money as long as you manage your risk appropriately. So when you find something that has positive expectancy, why not do that constantly? And that's what I'm doing. I prefer to sell puts in the futures products, the ES, the MES, rather than SPY because of the buying power relief that you get on futures. So with futures products, you get much greater buying power relief. And because of that, you get a much greater return on your capital by selling naked puts in ES and MES rather than an ETF like SPY. So the way I trade these, I sell the 10 delta put at 90 DTE. So I go 90 days out. That's 3 months out. And the reason I go a little farther out on these futures products, the ES, the MES, is because you can get really far out of the money the further out in time you go. So when I go 90 days out and I go 10 deltas, that is so far out of the money that it really takes a pretty serious crash for that 10 delta put to ever be tested. So that's why I do that particular delta and that particular DTE. And as far as management, I always exit the position at either 50% max profit or 21 DTE, whichever comes first. And the reason I've chosen these particular mechanics, 10 delta put, 90 DTE, managing at 50%, 21 DTE, is because this has an insanely high win rate. And 5-year backtesting using the TASTYTRADE's backtesting tool in their platform, you can see this thing has like more than a 97% win rate. If I go SPY, backtest, short put, and I do my mechanics, which is the 10 delta put at 90 DTE, and we put these things on, I'll do these every week on Monday. I exit at 21 DTE. I take profit at 50% if I do these mechanics here and I run the backtest. And the backtest will take a few seconds. It's got a lot of trades to run over the last 5 years as far as these short puts constantly over and over again on SPY. And I had to do the back test with SPY instead of the futures like ES, MES, and that's because there's no way to back test the futures because each futures contract is its own separate product. So when you backtest things for trading on the ES or the MES, you really have to backtest a product like SPY. But the numbers for this are exceptionally good. If I go into the details, you can see out of 220 trades taken, I win on 215. That is a 97.7% win rate. Average profit and loss per trade, I make on average $141 per trade every trade I took on SPY. Now, if I did this in MES, MES is about half the size of SPY. If I did this in the ES would be about 5 times the size of SPY, so you'd adjust the numbers accordingly. And again, when you find something that has that kind of positive expectancy, why wouldn't you just do it over and over again? So this is why this is number 1 as far as my core trading strategies. Number 2 is put credit spreads in SPY and QQQ. So again, we know that index products like the S&P 500 and the NASDAQ 100, they tend to go up over time. So bullish trades tend to work very well on these products. Now, when it comes to put credit spreads rather than naked short puts, I prefer using the ETFs, SPY and QQQ, rather than futures products like the ES or the NQ. And that's because of the smaller minimum tick sizes. Like with SPY and QQQ, the minimum tick sizes are a penny, which ends up being $1. The minimum tick sizes in the big futures products like ES and NQ are much larger. The minimum tick size in the ES is actually $12.50. So if you're trying to put on like a smaller put credit spread, something that would typically be like a $5 wide put credit spread, a $500 wide spread, a tiny little trade. If you had to adjust the tick, for price discovery, every minimum tick is $12.50. That's a little bit too big to be playing with, if you're trying to put on a smaller spread kind of a trade. So when it comes to naked options, I use the futures. So short puts, I use the futures products. When it comes to put credit spreads, I go to the SPY and the Qs. Another reason I like to stick with short puts in the ES and MES and then put credit spreads in SPY and Qs is just for accounting reasons. I like to keep things separately. The only trades I ever put on in the SPY and the Qs are these put credit spreads. All right, so that way it makes it very easy for me to know what my performance is on my put credit spread strategy when I only do it in these particular underlyings. So how do I trade these put credit spreads? Well, I put them on every Monday at 60 DTE. So every Monday, I go find the 60 DTE cycle in SPY and QQQ, and I sell the 35 delta short put, and then I buy the put 5 points below that to form the put credit spread. I exit the position at 50% max profit or 21 DTE, whichever one comes first. And these put credit spreads, you would think they would probably have a win rate of around 65, 70, maybe 75%. They have an insanely high win rate. In the 5-year back testing for these put credit spreads using these mechanics, they actually win about 80% of the time. So that is an exceptional win rate, very good positive expectancy. And again, once you find something that has positive expectancy, why wouldn't you do the thing over and over and over again? Another core strategy of mine is I like selling strangles in the sector ETFs. So we know the market, the overall market, is driven higher primarily by the tech sector. But of course, there's 12 other sectors to the market, primary sectors, and those tend to be much more flat. They don't move up as much as tech. It's tech that has the drastic move up that pushes the overall market up. So thus, I like to regularly trade strangles in the non-tech sector ETFs. And the reason is because those non-tech sectors tend not to go up as much. So they're perfect for delta neutral strategies like a strangle. So some of my favorite sector ETFs include XLE, XHB, XBI, XLU, XRT. Those are the energy sector, the home builder sector, the biotech sector, the utility sector, and the retail sector. Those are ones I play regularly. Now, liquidity in some of these is a little iffy. XLE is excellent. XLE has great liquidity. You could trade that all the time. The rest of these, sometimes you will find that they're not quite as liquid as other times. And then a lot of the other sector ETFs that I don't play, there are some sector ETFs that just have horrible liquidity, like XLB, which is the materials sector, not good liquidity. XLF, the financial sector, has good liquidity, but its implied volatility is always low because it's banking stocks, very low implied volatility in it. So I typically don't play the financial sector. But these are core strategies, I've always got a few of these on. If I go to my trading platform, TASTYTRADE, right now I have a strangle on in XLE. Typically I have things on, well, I've got one in XHB too. I don't have anything currently in XBI, XLU, XRT, any of the others, but I always have, 2, maybe 4 of these strangles on in some of the sector ETFs. How I trade these are pretty standard, one standard deviation strangle. So I typically sell around the 15 delta put and the 15 delta call at 60 DTE. Management is the same as most of the things I do. I exit the position at either 50% max profit or 21 DTE, whichever comes first. And one of the reasons I like putting on these delta neutral strangles is because they're a way for me to add more trades to my portfolio without adding any more long delta exposure, because I'm already really long the market because of all the short puts I sell in ES, MES, and all the put credit spreads I sell in SPY and the Qs. I'm already really long the market. Well, these strangles are neutral trades. They're not directionally long at all. They don't add any more long market exposure. So that is why I do these strangles. Therefore, diversification reasons. And a fourth core strategy of mine, of course, is running the wheel. You guys know I love the wheel strategy. Heck, I even wrote a book, The Super Wheel Option Strategy, available on Amazon. You'll find a link to that book in the show description. I love the wheel strategy. Now, I am pretty particular in the stocks that I use for the wheel. So we've already talked about tech is really the sector that drives the market higher, and I like running the wheel on the major tech companies because those are the big components of the market. They're the ones that are going to have the best liquidity. They're typically going to have really good implied volatility, meaning the premiums you get for selling options, those cash secured puts and covered calls, the premiums are going to be really good. And if you're not familiar with the way the wheel works, the wheel strategy involves selling cash secured puts until you get assigned long shares of the stock. And then you turn around and start selling covered calls against your new long stock position until you're assigned on the covered call, which means your long shares then get called away. And then you restart the wheel again by selling a new cash secured put, hence the wheel. The wheel keeps on turning. Now, I only run the wheel on good companies, really good companies, the big companies that have been around for a long time, and I know they're healthy and they're profitable. They're companies I don't mind holding shares potentially for months or even years if needed. So my favorite tech stocks to wheel, things that I've wheeled in the past: Apple, AMD, Amazon, Coin, Google, Meta, Microsoft, Nvidia, Tesla. I like wheeling all of these. I've wheeled all of these in the past, although some of them now have gotten to the size where I haven't wheeled them in a very long time. Like right now, Meta is trading like $600 a share. It used to trade at $100 a share. It was much more manageable. Now, some of these, the prices are inflated. Coinbase is trading well over $300 a share, where it was like $60 a share just a couple of years ago. But, you'll have market splits. For example, Nvidia, I couldn't wheel Nvidia a year and a half ago because it was trading like nearly $1,000 a share, but then it did a stock split and now it's trading at like $140 a share, making it much more wheelable, right? So even the ones that are not wheelable because they're too high a price, just give it some time. Eventually, some of these stocks like Meta and Coinbase will probably have a split and be much more reasonable. So when I run the wheel, I typically like to sell somewhere around the 20 delta put around 60 DTE. And on my covered calls, I like to sell around the 20 to 30 delta call, and I do that at 21 DTE. And the reason I do the covered calls 21 DTE is I only like to be in them for about 3 weeks. And that's because on my covered calls, a lot of times I will end up holding them to expiration, and I don't want to, for example, sell a 60 DTE covered call and hold it for the next 2 months. If I'm going to hold something to expiration, I want to do it a much shorter time frame. So that's why on my covered calls, I like to do them around 21 DTE. So those are my 4 main strategies, my 4 core strategies. I do also want to talk about my core hedges because I already mentioned I have a lot of bullish positions, and because of that, I need to hedge a little bit, right? So I have a lot of bullish positions. I have a few neutral positions as well, but it's also good to have some bearish positions too, just to lower those long deltas a little bit in case of a crash, because market crashes can and do happen. And if you are too long the market when the crash happens, you risk blowing up your account. So I like to have a few out of the money long puts in ES or MES as crash protection. If I go to my trading platform, I go to MES, you can see I've got a long put, 3 long puts, another long put, a long put. I've got like 7 long puts there, way out of the money long puts as crash protection. I've got 2 more here. I've got 9 different long puts, way out of the money long puts in MES right now. Again, just in case the bad event happens. I also like to have a few out of the money long calls in VIX. That's also for crash protection, and it's also for a volatility spike protection, because if volatility spikes out of the blue, for example, like we had on August 5th, 2024, where we had that crazy vol spike where VIX went from like 15 to 60, right? And that just blew up people's account. Well, because I have some long out of the money calls in VIX, I will be much better protected in an event like that. So the way I think about hedging is I like to dedicate about 1% of my total net lick account value each year to buying long puts in MES and long calls in VIX. That's the way I think about it, is I'm going to sacrifice 1% of my account each year in this kind of insurance policy. Long puts in MES and long calls in VIX. And really, think of it as insurance. You're not trying to profit from these things. And you don't buy insurance and think you're actually going to profit from buying insurance, right? When you buy insurance for your house or your car, you know you're not going to profit from it. That's there for an emergency situation. That's the same thing here, right? We're not trying to profit from these hedges, but when the bad event happens, what it's going to do is our losses will be greatly lessened, and that's what we want here. So there you have it, my core trading strategies, including some of how I hedge. Now, if you want to help support this channel, please consider subscribing to the DT Options Discord server. You'll actually get to see me trade live there each and every trading day. I hold a live voice chat there each and every trading day. I share my trading platform. You guys get to see everything as far as my opening trades and closing trades, including all the core strategies that I just talked about on this video. So sign up for the DT Options Discord. We'd love to have you over there. Peace, guys.